Laurence Balanco joins us, technical analyst with CLSA. Laurence, good morning. Thank you for joining us. We had a bit of an audio problem, but thank you for patiently, staying by and accommodating this interview request. What is your view of the world? It's turning out to be a dream start for US markets. It's turning out to be a dream start for emerging markets. Is this the beginning of a big uptrend for equities?
I think the emerging markets, we can make the case from a chart side that we have seen a basing pattern form between October and February, and we've seen the breakout from that. And that shows up when you look at the emerging markets relative to the developed markets ratio. So I think the emerging markets are well placed to have a base in place where we can start something more significant. If we look at developed markets, the picture's far more mixed. We've always had a very sharp recovery in US markets, but it could land up that we remain in broader trading ranges. So out of the global markets, from a chart side, the emerging markets look most compelling with the basing action that we saw through the fourth quarter and the retest of those lows in January and the move up since then.
Right. Laurence, wanted to understand what your view on the India markets are, because of late, and this is a very recent phenomena, that we've seen the lagging broader markets begin their outperformance. They're trying to catch up just that wee bit. And the benchmark index, that's the Nifty 50, is again trying to make an attempt to claw back to that 11,000. In fact, for the first time since February, we're back at those levels today. But do you see that there is a case for a fresh high to be taken before the big overhang? That's the elections, which should be in another 2.5 months. And is it sustainable, a move coming in?
Well, I think in the near term, we haven't seen any conclusive breakout from the range that you've seen since December. And obviously that's caused the underperformance by India relative to other emerging markets. And from where we sit and looking at the shorter term price action, we think we're likely to remain trapped in this range. So the top of the range is what we're testing currently, the 11,000 to the 11,140 area. And it does look like we'll spend a bit more time ranging in that pattern, but ultimately we still have an upside target of just over 12,000, and the key sector that gets us to those marginal new highs would be driven by the CNX Banks Index.
And within banks, Laurence, again, is it going to be a broad-based performance, or would you say it is the private banking which is going to push the bank index higher? Can we see even the PSU banks and the underperformers from year to date actually participate in that move?
Well, I think they will participate in the move, but I mean, sort of the standout banking stock from a chart perspective right now is Axis Bank. This is the first one to have broken out of a full-year trading range, and that would be sort of a key buy candidate, even with this market sort of trapped in the trading range that it's currently. So that's the standout. But if you look at ICICI and State Bank of India, you've also got sort of multi-year trading ranges that those two stocks are expected to emerge from too. That would be positive, but Axis Bank right now is a standout.
Laurence, hi there, morning. What exactly is your sense when it comes to volatility? We had seen volatility pick up of late. Do you think that, that phase is likely to remain prolonged?
Yes, I think so. And if you look at the interesting thing is the S&P, for example, is within 5% of its all-time high. And if you look at it, if you look at the VIX in comparison to that, the VIX is well off the low volatility lows that it made in 2018. So I do think we've shifted into a higher volatility period, and we should see essentially the VIX trading in the lower or mid-teens, I should say, towards the 30 to 35 area going forward. So I do think we've transitioned into a higher volatility environment.
Lawrence, what's the outlook when it comes to the currency? Where exactly do you see the rupee headed vis-a-vis the dollar?
Yes, I think like the equity market, Rupee has been one of the weaker emerging market currencies, and it hasn't been. It's been that we broke above the 68, 69 area in August 2018, and we've held that breakout. So right now we've seen a consolidation above that 69 area, but from that longer term side, the break above the 68, 69 area still gives us an upside target of 76. So one of the weaker EM currency setups. You would really need to see Rupee break below that 68, 69 to suggest anything of substance as far as strengthening goes. But as long as it remains above that, I would have a broader weakening trend for Rupee.
Within the index, though, aside of private banks, which you said are going to be the largest contributors to the Nifty taking a fresh high, what happens to other blue chip names like a Reliance Industries and L&T, ITC, which has just about begun its move, and then the big outperformer from last year, that's IT?
Yes, I mean, I'll comment on the IT stocks because they are sort of relevant to what we've looked at recently. But, great outperformers through late 17 and 18. But if you look at something like Tata Consulting, that's rolled over and broken that uptrend. So that looks like it does underperform. And even the likes of Infosys, which try to recently break out, it's had slowing upside momentum. So to me, the obvious switch from a large cap and sector basis is to be taking profits in the tech side and rotating into the banks.
And Laurence, what's the sense that you're getting when it comes to the leadership for the markets? Where do you see that it's going to be for the Nifty right now?
Well, in the short term, I think because it's likely to remain range-bound ahead of the election, I think we continue to see this sort of shorter-term rotation. But from a longer-term side, as I said before, to me it's the banks index, and that's going to be the leadership group for the market.
Right, Laurence, let's you go on that note. Appreciate you joining in this morning and giving us a sense as to what your outlook is on the current trade setup as well as the different indices. So